The Crypto Street podcast is hosted by Crypto Dale, Prince, and Killer Whale, who can be found on Twitter at CryptoDale, at Killer Whale, K1LLERWH4LE, and at 13Prince31. None of this should be construed as investment advice. For information on how to join our private Telegram group, The Pod, please email tcsp@protonmail.com. The Crypto Street podcasts are officially sponsored by 21 Cryptos, the world's first and only cryptocurrency trading magazine. Visit 21cryptos.com and enjoy 50-plus pages of pro tips and predictions, an analysis of the best 21 coins to invest in for the month, trading lessons and articles from your favorite pros, price action event calendars, entertainment, and lots more. Stay ahead of the game and get your copy today. Visit 21cryptos.com.
Yo, what's going on out there, crypto world? My name is Crypto Dale. Welcome to another fantastic episode of Crypto Street Podcast. I'm joined by two of my favorite co-hosts ever, Killer Whale.
Beautiful morning in Los Angeles. How's it going, everybody?
And then also my favorite Canadian, even though I'm banned from the country, Prince.
Hey, guys.
Today's guest is really a fascinating and a very intelligent individual, Ari Paul, who is the CIO and managing partner of Block Tower Capital, which is a crypto trading and portfolio management company. Before his time there, he was a portfolio manager at the University of Chicago, where he managed roughly $150 million. In 2016, he was named to the CIO.com Top 40 Under 40, which is a pretty big deal if you ask me. So, Ari, thank you very much for taking time joining us. We're going to have some good conversation today about crypto.
Thanks for having me.
So let's just kind of touch base here on, how did you go from the University of Chicago to a crypto portfolio manager? What kind of sparked your interest within the crypto market?
It really came from three separate angles. So first, just as an investor, all the way back in 2009, the Fed was printing all this money, and I knew there wouldn't be inflation or major currency depreciation for a long time. But eventually, I knew I wanted to get out of the US dollar. I wanted to get out of the yen, the Swiss franc. I wanted to get out of everything. And over the next few years, you had kind of this big run up in other assets and real estate, the stock market. As an investor, really, there's nothing that looks that attractive. I was looking for an asset that couldn't be depreciated, looking for a currency where you didn't have a central bank that could print the heck out of it. The other angle, frankly, was, there's an interesting binary. I'll talk about cryptocurrency to a lot of Americans, and they'll say, why would anyone want something that can't be censored by a government or seized by a government? And there's really a binary. So I had family members who had to flee, some successfully, some not, Nazi Germany. I talked to people who had family members or who themselves had to flee Maoist China or Pinochet's Chile, or, it's not rare in the world that, and as America, we're a melting pot, we're a nation of refugees. So there are people from all over the world, and including people today who wish they could make it here from, Venezuela and even places like Argentina with capital controls. So there was that element, that kind of humanitarian, I want something like Bitcoin to exist for refugees. And then the last piece, as an investor, the idea that the opportunity to participate in the birth of a new asset class, the birth of kind of this Wild West crazy space where we're trying to figure out how to value these things is such an amazing opportunity from the perspective of intellectual curiosity. To get to debate with, say, Joel Monegro, the author of the Fat Protocol essay, how, token economics, it's incredible because we don't know anything. And so we get to try to figure it out from scratch.
Yeah, it's kind of this big economic experiment. That's kind of how I like to sum it up, and we're right in the middle of it.
You kind of feel like you're a member of like a secret club too, don't you? It's like a little bit off the beaten path, still, even though it's really becoming way more mainstream, but it still kind of feels like an exclusive society of some sort, which is kind of neat.
It's really weird to me that it's becoming popular, at least within certain bubbles. I'm a contrarian by heart. I feel much more comfortable kind of shouting into the wind that it's not tulips than I do now, where at CNBC every day, Bloomberg TV every day has someone talking about crypto, and we're getting constant inbounds asking us to appear on TV, not defensively, not to like justify it, but to explain what's happening, which to me is very weird. I'm not used to being, for lack of a better word, popular. So, and it is becoming popular, and it's going to, We're just at the beginning of the retail explosion.
It's crazy to think about.
Yeah, it's exactly what I'm thinking.
I know even for myself, you think, wow, I've been here now around 2 years and this can't keep going, can it? Because holy crap. But then you look at it on the larger scale and it's like, okay, crypto's only actually worth this much. And then we want to compare that maybe to another traditional market that is more developed and, it's in the tens of trillions or something, right? And so it's just crazy to think about. And sometimes you have to almost zoom out a bit because, I find myself almost too zoomed in and I just get caught up in it at times.
Same here. A statistic that I think is maybe the most powerful is no one owns any. And that's almost literally true. So less than 1% of the world owns any cryptocurrency at all. So a good analogy is it's maybe like 1995 with email, where about 1% of the world used email. With websites at the time, far less than that had actually used, an analogy that a friend is Elizabeth Stark, the CEO of the Lightning Company. And Elizabeth, her analogy, I don't want to steal it without citing her, is we're having the Netscape moment. So in 1995, Netscape Navigator came onto the scene, and suddenly the average person could browse the internet. And we take it so for granted, but so in 1994, there were only 3,000 websites in the world, and almost no one visited them. Outside of, in the US, maybe 1 in 10 Americans had ever visited a website, and outside the US, it was probably 1 in 100. We're in that moment right now where suddenly cryptocurrency is starting to be globally accessible.
Yeah, I talked about this a lot on Twitter just the past couple of days. Just in the past, 2 or 3 weeks, I've noticed that crypto has really been way more of a public conversation. I hear lots of people walking around talking about it. I heard a lady driving by in her car, and I heard an ad on the radio or somebody on the radio mentioned Bitcoin, and I was like, oh God, the top is in. And so whenever I hear this stuff now, it's starting to scare me a little bit. Just cause like you said, Ari, I feel more comfortable, when I'm kind of the contrarian. Everybody's like, yeah, what are you talking about? And they're like, oh yeah, okay. But that's it's non-existent. It's not a real thing. And now that it's becoming legitimate, or way more mainstream, it's a little bit uncomfortable. I don't know how I feel.
Well, it's what we went from, one mention about Bitcoin, maybe a month on, Bloomberg or something to now it's, every day pretty much. It's just insane.
Every day. Yeah, pretty much. Front page every day.
6 months ago, I was reaching out to endowments, pensions, big banks, trying to foster interest, educate, as well as learn, just kind of talk. And now, literally every day, we have inbounds from half of the big banks. So every big bank has 18 divisions. They're this crazy. There's 47 vice presidents of security sales of Goldman, for example. If they're weird, they're really large companies with massive hierarchies. So you have all these giant divisions that act as independent companies. And so within a day, I might have 2 inbounds from different Credit Suisse divisions. And there's almost a desperation for them to get smart and get involved rather than get left behind. The CBOE just launched futures, and it was one of the most successful product launches of an exchange ever. And so you've exchanges around the world now reacting to the CBOE launch, saying, we don't really understand cryptocurrency, but we understand exchange fees. Mm-hmm. And if we don't offer these products, we're going to get left behind. And the CBOE and the CME are going to be established as the place the world trades Bitcoin futures. So now there's the race in London and Dubai and in Singapore from other exchanges to quickly add cryptocurrency derivatives.
Yeah, and today we got the CME launching, so that's going to be fun to watch. You're going to have a lot of volatility here. What's your take on that? CME. Do you think the CME is going to play a bigger role than the SIBO when it comes down to volume and such?
The CME is probably going to have more volume. I don't think it's going to be that different of an effect. So Bitcoin is incredibly liquid. You can't really trust the exchange numbers. There's a lot of wash trading, but we're looking at real volume of over $5 billion a day in Bitcoin at a minimum. I mean, it could be much more. I'm being conservative with that. So, CME and CBOE, it's going to take them a while for them to get up to a point where they're actually moving the market. Right now, what you're seeing is that the CBOE futures were trading at a premium. And I think that reflects, a trader asked me that the CBOE futures were trading $22,000 from March settlement, a few months out. And they were asking basically, is that a prediction? Is the market telling us that Bitcoin's going to be at 22,000 in March? And the answer is no. What that reflects is there are people who want to own Bitcoin who can't directly own it for some reason. So if they're a hedge fund and maybe they're not legally allowed, or it's a regulatory hassle or a security risk for them to actually buy Bitcoin and directly own it, they're willing to pay a 10 or 20% premium to own it through the futures, which is incredible. I mean, in traditional markets, you're counting basis points. The idea that you would pay a 10 or 20% premium as a professional trader or hedge fund because you so desperately want access is really incredible.
If you could talk a little bit about like different areas of the market that you are especially fond of. I guess crypto doesn't really have sectors yet, not really clear ones at least, but areas of the market that you think are going to be, ones that outperform or that you're especially interested in going forward.
Sure. So a phrase that I really like is in traditional finance, basically there's three things that people accept you earn a return for, and that's beta, duration, and liquidity. And so beta is exposure to the market as a whole. Duration is exposure to credit risk over time. And liquidity means if you're willing to lock your money up, you should get paid to do that. In cryptocurrency, there's a concept kind of like liquidity, but much, much bigger. And I like giving it a separate name. I call it accessibility. So the idea is, and we see this, and this will be intuitive to you guys once I kind of just say what I'm using the word to mean. When a cryptocurrency is hard to access and then it becomes easier to access, it goes up. So when something is added to Coinbase, when it's added to BitDump, when it becomes added to the Nano Ledger S, when you have a cryptocurrency like Monero, for example, that starts off being very, very hard to use, right? There was a point where you almost had to be an engineer to securely store Monero. And now Monero is being integrated into a hardware wallet. So suddenly it's going to become much, much easier. We're about to get smartphone apps for a lot of these cryptocurrencies. Not just to buy. So now you have a Coinbase smartphone app, but even if I want to send you Monero, I'm going to be able to do it by a smartphone app. And so that accessibility we see the market impact, and it's real. It's kind of an inefficiency. As a trader, I can trade it, but I actually think there's more value to a cryptocurrency that you can use more easily. And so a really basic thesis in cryptocurrency is think about what things are currently hard to use that are about to become easier to use and easier to buy and easier to store and easier to send. So obviously, we just saw this massive rally in kind of the Coinbase coins, right? So you have this retail money coming in, Bitcoin rallies, then Ether rallies, then Litecoin rallies, almost in sequence. Everyone's speculating on what the next Coinbase editions will be. Whatever they add will almost certainly go up dramatically. And kind of extending that thinking. So obviously, if there's an exchange traded, an ETF, exchange traded, ETNs. So you have Zcash, which is going to get an ETN soon. The ETFs are even more powerful because they can be arbitraged. So anything that gets a retail product like that is likely to appreciate dramatically. And I think it's I try to remind myself to keep it simple. So it's tempting to try to be really, really smart as a trader, but that is going to continue driving price, I think. Another thing is marketing. So this I really struggle with. My favorite cryptocurrencies are the ones that are the most cypherpunk, the most decentralized and volunteerist. I'll use Monero as an example again, where you have really, voluntary devs. You don't have, until very recently, you didn't really have marketing. Cryptocurrencies like Dash, for example, that have a huge marketing budget, have done very well. And it's because they market. And the new entrant into cryptocurrency has no way of differentiating a Dash from Monero. They're not looking at engineering. They're looking at what they heard on the radio, where they see a commercial ad or a Super Bowl ad. So marketing is powerful. The challenge, of course, is that if you're trying to buy something that's quality, it's tough. For me, I struggle with that question of, I know something's about to be marketed. I know it's probably going to go up, but do I really want to buy something that isn't fundamentally valuable just because it's going to get marketed and we're going to buy it?
Yeah. Well, I have that same issue, but almost like vice versa. It's like, I know this isn't going to be marketed as much. And it's like, do I want to buy it? I know the fundamentals are great, but playing based on the psychology of the market, it's like, it's probably going to lag behind the others just because of that, right? I think one of my favorite examples is probably Decred. Great coin, like the governance, I love it, but it doesn't get the same marketing, and so it's funny.
Well, they even have like pretty good marketing, I think, compared to some. Yeah. I think like a really good example is like Monero, where they have a lot of things going for them technology wise. They have a pretty good underground, strong, grassroots community, but they don't really do much in the way of marketing. It's almost like this anti-marketing, which I think kind of can work, but at a certain point, you are going to get out-marketed and outperformed by these companies that are really putting a lot of dollars and effort and hours behind this sort of thing.
Yeah.
So it's an interesting dynamic, because crypto in general is so like anti-corporation, anti-government, stick it to the man. And it's kind of anti this whole marketing thing in general. But I mean, this stuff works. Companies do it for a reason. So it's interesting to see.
So I think there is a way to kind of have those two meet that people are coming to appreciate. And I laugh when you said Decred, or am I mispronouncing it? Is it Decred?
I'm not even sure. I might be mispronouncing it myself. So
I've thought Decred as well. I think that might be a Canadian thing.
Maybe.
Okay. I think it's Decred. So Decred is a great project. It's actually one of my favorites as well, from kind of a bottom up perspective. And it's such a great example where you have a team of just stellar world-class engineers who've just been grinding away at code. And they weren't trying to market or pitch, or they weren't buying radio ads. They weren't, and so where I think from my perspective as an investor, that produces a really interesting opportunity, because that's low hanging fruit to then actually help market. So one thing that we do is we talk to teams. We try to find things like that where we think there's really quality engineering. Maybe we like it philosophically, a great team, but they just haven't marketed, maybe because that's not the skill set and they know that. So we'll actually talk to the team and say, hey, we want to help you guys. We think there's tremendous potential here. You just need to help. We need to help get the word out. And a lot of these teams are very, very open to that. And Monero recently, we didn't help Monero with this, but Monero recently has started marketing more aggressively. And I think that's part of why they've done quite well.
I noticed that also.
So it doesn't have to be apples and oranges. You can have a high quality team, high quality project that accepts that marketing is actually necessary and that does that and then has a lot of success.
Hey, Ari, let's talk about how you value a certain crypto asset. In traditional markets, you have the earnings reports and stuff like that. How do you and your team value a potential investment?
It's tough. So I really think of it as two separate categories, which are, I think of it as the store value coins and the utility coins, which is it's an artificial binary. I'm not saying it's that simple, but so the really, really simple metric I use, big picture for what store value should be worth as a whole, is how much wealth in the world right now wants to be stored in a way that is judgment resistant, seizure resistant, meaning can't easily be confiscated by a judge or a corrupt politician or corrupt law enforcement. And a really simple proxy for that is the offshore banking system, which is around $20-30 trillion. And I call that a floor, because a lot of people around the world would love to have a Swiss bank account if they could. If they could put $5,000 in a Swiss bank account easily, they would. So I think the actual demand is much, much higher. So I think that's kind of what we're looking at. So then the question is, well, what is it? Winner take all? Is all of that going to go to Bitcoin? Is Ether a store value? I think it's probably mostly winner take all with a few subdivisions. So, for example, I really like the privacy coins in general. Coins that are optimized for anonymous transactions and anonymous store of wealth, I think have a lot of value. I can't put a number on it. I can't tell you what percentage of that 30 trillion should be Monero or Zcash or whatever your favorite privacy coin is, but I think a meaningful percentage. Where you get into real valuation techniques is the utility networks. It's tough. We don't have a single success case yet. We don't have a single empirical example. There's not one data point. There's not a single utility network that is actually deriving meaningful intrinsic value today. So there's no way to actually test your hypothesis. I think Chris Berniski and Joel Monegro have done a lot of great work on this, showing that if you have a valuable utility network, but the token velocity is extremely high, the token doesn't necessarily capture any of that value or almost none. And similarly, these are open source. You can fork them. So if someone produces a really valuable piece of code, but it's open source, and for example, they keep 30% of the tokens and maybe they have staking or burning or they do something to slow down velocity, what prevents someone else from forking the network and removing those annoyances and just basically giving people a free utility network where that uses, instead of using its own token, uses Bitcoin or uses Ether or uses whatever? The real answer is I don't know. So I've invested very, very scarcely in utility networks and in ICOs. Part of that is a lack of certainty. I'm fairly confident that most are extremely overvalued. So I don't know what the right valuation technique is, but I'm pretty confident that a lot of these things that are being valued at many hundreds of millions of dollars, even billions, are not worth that. Because ultimately the economic model looks a lot more like a company. So if you have, it's almost like a revenue and a profit model. I think this is a really important point. The service that I get when I invest in Bitcoin or Monero for the store value is judgment resistance. And to get that service, I have to hold the asset. So if I want $100 of judgment resistance, I have to hold $100 of Bitcoin. So I'm going to increase the market value of Bitcoin by the amount that I want of that service. In contrast with the utility network, if I want let's say it's a decentralized Airbnb or a decentralized rideshare, decentralized whatever. If I want to spend $100 on rides, I spend the $100, but then that immediately goes into someone else's hand who probably wants to liquidate it. So it's not clear how much of that $100 actually turns into token value, but it's probably a tiny, tiny fraction. A little bit like how most companies, airlines might collect many billions in revenue. They might end up with zero profit at the end.
So one idea that I kind of want to talk about, and it's an idea that I see, on Twitter and kind of just getting a feel for things on Reddit and, other social communities centered around crypto is the idea that I think people in general tend to become a little bit more of Bitcoin maximalists over time as they spend a little bit more time in crypto. I think it kind of goes, you get into Bitcoin, then you kind of get into alts for a while, and then slowly after that, you kind of gravitate slowly again towards Bitcoin being kind of the end all be all. That's what I found a little bit, with me. I got in, I found out about Bitcoin, I found out about Ethereum pretty quickly after that. And I was like, why would anybody ever buy Bitcoin? Ethereum does everything it does and better. But then as you get more involved and I think you get more knowledgeable, you realize there are a lot of benefits to the simplicity of Bitcoin, the network effects, the security behind it, given how much processing power it has behind the network. Go through perhaps if you've had any experience, maybe in your own experience in crypto with that kind of feeling or that progression, or if you've noticed anything like that as well.
Sure. So my own progression was early 2014. I bought my first Bitcoin. I had been aware of it for about a year and a half before, but I just hadn't. Part of it was hard for me. I saw it rally from $3 to $100, and how do you buy into something that's up 30x? And it took me. I didn't have like the framework I just talked about, where I think the addressable market is 20-30 trillion. That gives you the confidence to buy in with Bitcoin at whatever it's at today, 350 billion market cap or wherever it is. I didn't have that at the time, so I didn't really have a framework. So I got into Bitcoin, like, okay, store value use case makes sense. Then I discovered Ethereum. When was that? I want to say around late 2015, early 2016, maybe. And what really struck me there was not even my own interests, but I had a lot of friends who were totally uninterested by Bitcoin, but loved Ethereum because they were engineers who just loved the smart contract possibilities. They weren't cypherpunks. They weren't anarchists. They weren't even libertarian. They didn't care about regimes, defending against oppressive regimes. They just loved the tech. And I realized that this is about to introduce a whole new wave of people into cryptocurrency, a whole new bunch of people who are not just different philosophically and politically, or who just want to play around in a new tech sandbox. When I joined Twitter, I think it was in March, and some of the first debates I had were with the Bitcoin Uncensored guys, who were hardcore Bitcoin maximalists. And I kept saying, they kept saying, of course, if you do it in Bitcoin, everything else is a scam. And I kept saying, but we don't apply that anywhere else in life. Like, you can do anything you want in C++. Python isn't a scam, right? You can get to where you want to go maybe in a Humvee, but some people want a motorcycle, right? Saying, Casio might work as well as a Rolex. It doesn't mean a Rolex is a scam. You might not, you might not want to spend $5,000 on a Rolex, but it doesn't mean that jewelry has zero value. So I think the real answer is I fall somewhere in between. From a purely practical perspective, we've seen how hard it is to code a complex smart contract. It still seems incredibly daunting, right? Even the most simple smart contracts have turned out to be buggy. I had a conversation with, so the guys at Union Square Ventures are brilliant. They were Union Square Ventures is a top-notch venture capital firm. And they've been in the space for at least 4 years. They're leading thinkers. Joel Monegro was there. Albert Wenger is a thought leader in cryptocurrency. They're great guys. And an idea that was being thrown around from them was there may be a real downside or cost to Turing Complete. And Turing Complete, not only might it not be an improvement, it might actually be a negative because of the halting problem and because you can't actually know what's going to happen with those deployed contracts. There's no way to actually be confident that the system as a whole has integrity if you have a bunch of Turing Complete smart contracts deployed. Now, I'm not a computer scientist. I don't pretend to be one, but certainly we're at a point right now where the burden is on kind of the smart contract crowd or the diverse application crowd to show real benefit. With that said, I believe in brand. So people will say, you can do anything with Bitcoin, why use anything else? And my response will be, well, why do people wear Livestrong bracelets? Why do people do CrossFit? Why do they do Race for the Cure? All of those things you can do on your own. You can just donate to charity yourself. You can just work out, in your basement. People like community. People like brand. Those things do have value. That going to be the $20 trillion use case? Probably not. But, so for example, I'm an advisor to Pinkcoin. I've never recommended that anyone buy it. I've never shilled it. All I've said is I'm advising the team. What I've said is I actually like the community and I actually like the idea. It's a group of people who say we care about charity and we want to do charity together. That's it. Yeah. It's not that this coin is optimized. Yeah, you can give to Bitcoin. And in fact, Pinkcoin will help you give Bitcoin to a charity of your choice. So just a community that says we want to hang out and, similar to like Habitat for Humanity, we want to hang out and build homes for people who need them on a Sunday.
Yeah, shout out to Pinkcoin, by the way. We just did a giveaway with them over the past week. Super successful. Got a lot of good, retweets and just got a lot of good exposure for, a really good cause with them. So real quick shout out to them and Ellipse on Twitter, who we kind of worked with to work with Pinkcoin to do that giveaway.
So, Ari, I'm just going to kind of change the direction, I guess, a little bit from, the specific coins. Now, in the media, we've seen a lot of traditional finance folks, traditional markets voicing their opinions, how, they think Bitcoin and cryptos are a scam. They don't see it ending well. It's not going to go anywhere, blah, blah, blah. A lot of pessimism about it. Now yourself, you get to deal with a lot of these traditional market, investors. The general feel, for yourself, when you're talking to these people, how is it? What are their general thoughts right now? Kind of, what's the feel aside from what the media likes to say?
It's changed so much over the last 6 months. So 18 months ago, 12 months ago, almost none of them knew anything about it. It was a curiosity. They weren't defensive about it. They were just, it was a curiosity. And they're like, I assume this is kind of just a toy. And to be fair to them, it was tiny. So 2 years ago, you were looking at a $5 billion market cap. From the perspective, like I was working at an $8 billion endowment. Like University of Chicago could have bought all of cryptocurrency. I'm not saying they actually could have, because the Bitcoin OG certainly wouldn't have sold. But, it wasn't investable. It wasn't that meaningful. It wasn't that interesting. Now we're at over 500 billion. It's really incredible. Now it's they're all paying attention because they have to. So I think I've seen kind of a few phases. So you had the phase where this is a toy, it's a curiosity. I don't know anything about it and I don't need to. Then you had the phase of I'm being pushed about this. I'm being people like, people like me pushing the CIOs of endowments, pushing private wealth managers to seriously consider this. And then there was a defensiveness because they didn't understand it. Asking them to understand it was a big ask, right? I would say, look, I understand this is complicated. Spend 30 hours. Well, they don't want to do that. They don't want to devote time and it's mentally challenging and it's outside their area of expertise. It's outside their core competence. So it was a big ask, kind of demanding, saying, guys, this is important. You need to learn about it. I understand. I'm not asking you to invest without understanding it, but do your homework. And that's a big ask, right? So then they got defensive. Then they said, basically go away. It's tulips. We don't want to think about it. This is stupid. And now they've come full circle where they're getting so much pull. Yeah. So we meet with a big bank and their private wealth management division says, I'm getting 5 calls a day from clients asking, why didn't you put me in this a year ago? And how do I invest in it now? And they can't say it's tulips because they're in a position now where they have to at least be smart about it. They can say now's not the right time, wait for a dip, whatever, but they have to at least pretend that they know what they're talking about because they're getting asked. Same with we're about to go through that phase with people at endowments and pensions where they're going to be asked by reporters, by the board of their university, why did you pass on this? This was the best performing investment of the last year and of the last 5 years, but it was investable for the last year. We know you might not have heard about it 5 years ago. We know you heard about it a year ago. Why'd you pass on it? So now it's a pull, and there's almost a little bit of a fear and a desperation to get smart and get involved.
If you can talk a little bit, I'm curious about your thoughts on what you see as the biggest challenges to crypto in the year 2018 going forward, or beyond, but more kind of locally in the next 6 months to a year, the biggest challenges you see to the ecosystem, whether it be regulatory, or maybe even problems with specific coins. Scaling, I know, is a big one that Ethereum is working on with sharding. You can comment specifically on any of that, or just, again, general problems to the ecosystem or threats.
Yeah, so I guess 3 things. So first, cryptocurrency keeps going through the Gartner hype cycle, where and the idea of the Gartner hype cycle is just you have something that is truly a revolutionary new technology. People get really excited about it. You get an asset bubble. Then people realize that it's a revolutionary technology, but it's not here yet. It's not doing what it promised yet, and it's further away than we thought. And you get a crash, and then you get a new bull market. So Bitcoin's gone through that several times already. Back in 2013, people were talking about, I'm going to be able to buy coffee on the corner with Bitcoin in 6 months. And we had the whole Bitcoin scaling drama. We realized that high throughput was still a ways away. Mass adoption was still a ways away. So I think that was part of why you had the bear market for 2013 or 2015. Now Bitcoin as a store of value, I think, is actually mature. I think the world is ready for it. We're seeing it happen right now. It's being adopted for that purpose. Bitcoin as a means of payment, I think we're actually starting to see. It's obviously not quite there yet, but things like Lightning Network and putting politics aside, things like Bitcoin Cash, whether you like it as an asset or not, or Litecoin or Ripple or Stellar, just protocols that actually enable high throughput. And again, I'm not saying whether they're good or not in an existential sense, but you'll actually be able to use them as payment channels. We're at that point where we have high throughput blockchains now, or things, or even we don't yet have a DAG that I would feel comfortable using, but sooner or later we'll have a DAG, which is just a different database architecture. So I do think we're going to go through that kind of Gartner phase again. So us in the crypto community kind of went through it with Ethereum, I think, back in June. So Ethereum broke $400 in June, and then there was this realization that, and then suddenly the network was congested, right? Everyone was super excited, and then network got congested. Coinbase said Ether withdrawals delayed due to severe network congestion, and the market fell 65%. I think one of the reasons it fell 65% was suddenly people realized, wow, this thing cannot, we can't deploy smart contracts yet. We can't act, CryptoKitties now is kind of bringing the network down. So now that's with very simple smart contracts. A lot of those new retail investors that get hyped, that get excited about whatever it is, I think there's a risk there. But that's minor. By far, I think there are two big risks. So one is regulatory. The world didn't really care about cryptocurrency. By the world, I mean central banks, I mean law enforcement, I mean government agencies. They didn't really care. Now they care. Every central bank around the world is focusing on this. These parabolic moves got every regulator's attention around the world. We just saw South Korea issue a relatively minor regulatory announcement. I'll be surprised if either the US or South Korea or Japan in the next 3 months doesn't issue something more serious, because we're actually going to start encroaching on central bank territory. All of the political ideals that the early Bitcoin OGs kind of espoused, we're getting there. We're getting to the point where cryptocurrency will actually impact global monetary policy.
Well, yeah, and we're already seeing that. Venezuela, I do believe, they're doing their petro-backed crypto now, which is just crazy because that completely sidesteps their central bank, right? So yeah, we're already seeing that.
We're seeing it in small countries like Venezuela and Zimbabwe, and the next will be, China was one of the first to crack down, partly because they have capital controls, and so they're more concerned about capital control evasion. But I think even you'll see the more liberal countries at least consider much more severe regulation within the next year or two, and possibly much sooner. And then the last thing is these are technologies, right? The new people entering the space, they think of it as a financial asset. I can buy a Bitcoin future. I can buy Bitcoin on Coinbase. I leave it on Coinbase. These are people who've never touched a private key. They've never even necessarily done they've never signed a transaction. They don't even, they don't realize that there's an actual network involved. And there's going to be a rude awakening. So that rude awakening can happen when you have, really severe congestion that causes delays of multiple days. I think one thing that could happen in the next year is protocols that share the same hash algorithm. So you have Bitcoin and Bitcoin Cash both using SHA-256. That poses real challenges, I think, to the game theory underlying Bitcoin. I'm not saying it's an existential permanent threat, but for example, if you have a huge amount of hash power shift from one to the other and you have block confirmation times go from 10 minutes to 20 minutes or 30 minutes, at the same time the price corrects, just getting back the last 2 months of gains, for example, suddenly you have 30-minute and then 60-minute confirmation times and fees skyrocket to $50 or $100 a transaction. That's going to make a lot of headlines, and a lot of people are going to be shocked. They're not going to understand that was even a possibility. Here's another one. Bitcoin futures settle to what? Or I buy the GBTC. I buy the exchange traded note that holds Bitcoin. That exchange traded note, they've announced that they are not going to collect some of the hard forks.
Oh.
They've announced that they are not going to collect some of the, Bitcoin Diamond and Bitcoin Super, whatever. There's 6 hard forks.
Super Unlimited. Yeah.
Super Unlimited.
Ridiculous names popping up left and right.
And they've announced that they're not going to collect it for their investors. And so people don't know what they own, right? You own Bitcoin via GBTC. What do you actually have? You have Bitcoin. You have a Bitcoin future. What do you actually have? And that at some point that's going to produce some real confusion and challenges, and then probably regulatory and then lawsuits. You'll have an investment fund that invested in GBTC and sues them for not giving them their Bitcoin Diamond, and that'll just mass confusion. So these are all, I don't mean to exaggerate the risks, but these are things I think are likely that, they're bumps in the road.
And people don't really, I think people new to the space, they don't really get that something like GBTC is not actually buying Bitcoin, really. You're paying a gigantic premium to the actual price of buying a Bitcoin on, say, Coinbase or Bitfinex or GDAX or Gemini or any of the other exchanges, the more traditional ones where you're actually buying a Bitcoin. And it just kind of goes back to the learning curve that is involved in getting into crypto. I think even for me, it took me a while to kind of get the idea in my head that these coins are not really located anywhere. It's just I have a certain line of code in this gigantic sort of computer program that entitles me to a certain amount of this, immutable sort of coin where you can only, there are only a certain amount, there are only a certain amount out there will only be a certain amount ever. And it just takes a while to grasp even these, kind of what are basic concepts in crypto, just because they're very new things. It's a new technology. And it's an extremely, but that's part of what makes it interesting too, is it's so we don't know what's going to happen. With stocks, companies are going to go up and down, but we're really at the forefront of a really new revolutionary technology, a new asset class. And it's fascinating to see. I have a background in traditional finance too. I say this all the time, Ari, but it's hard to focus on that with crypto going on. It's just so much more fascinating. It's 24/7. It's really an extremely addicting thing. But it's just so interesting. It's hard to look away from.
Definitely. I can't imagine trying to trade stocks in my own portfolio at the same time. Who cares?
Yeah. So boring. Oh my God.
Yeah. I've said this before on here, Ari. My father-in-law came to me once and said, here's a couple $1,000s. I don't want you to make me 3 to 5% because that's what my 401k is doing. I want, to go big or go home. So that's what I think is the most intriguing to new people.
How is that money doing, Dale?
Oh man, I'm up probably 2 times already.
Solid. Nice.
But do not seek financial advice from me, please.
He's a happy camper.
Yeah, he is. He calls me almost nightly and is like, "So what are you thinking? What are you thinking about?" And I'm like, just sit on what you got. It's working.
Hey, this is another thing I mentioned on Twitter, but I cannot tell you how many people have asked me about Ripple in the past week. Because all these new people are coming into crypto and they're slowly making their way to alts. And so many people are going, hey, what do you think about Ripple? Is that a good buy now? Because they see it below $1 and it's just it's like candy hanging in front of them. It's like, wait, this is blockchain and it's related to finance companies. It's it's working with real companies and banks. And that's what they see. And, Ripple gets a bad reputation in the community. People kind of hate on it. I think, for some good reasons and some bad. But it's extremely enticing to new people. That is for absolutely certain. I mean, every single new person I've told about crypto has pretty much approached me asking about Ripple.
It's funny too,
and
because
I think going back to what you mentioned about coins being added to Coinbase, I think that's a fairly good candidate to be one of the next ones. And that's really going to run up. I mean, because if you see it break $1, I think psychologically you could see $2, $3. So I think Ripple's a decent buy right now, to be honest.
It's funny because, kind of like what you were touching on, Ari, people don't really know how to approach these markets, right? Because they're not like equities. So you have a lot of people who will start shouting, oh, go buy Ripple because it's so cheap. It's one of the cheaper coins out there. But then little do they realize, well, there's actually a coin supply, which is going to affect the market cap, so yeah, it might seem cheap and you might have a coin that's at $50. You might think it's expensive, but in reality, this $50 coin is, maybe 10 times cheaper in market cap value terms. So it's kind of funny just even basing along those lines.
Yeah, absolutely. I agree. I mean, you hit both points, right? The massive supply held by the Ripple company, but then there's the retail effect. And an interesting thing, Ripple's probably the perfect example of this. So you have a company that has such an insane amount of money tied to the value of the token. They're incentivized to spend $1 billion marketing it. You think about what that means. If I was running the Ripple company, I would spend $1 billion blanketing the world with ads promoting Ripple. I would spend another $1 billion creating corporate sponsorships. I would have a staff of 5,000 people at this point in every part of the world because they have the money to do it and they're economically incentivized to do it. And that's powerful, at least for a time being, right? Is Ripple kind of the coin that's likely to be a winner in 10 years? That's a separate question.
So, Ari, another question here for you. Kind of going back to the threats towards crypto as a whole. I know I've been asked this a few times actually by a bunch of people who are trying to get more knowledgeable in it, and they like to ask, well, what about mining and all the electricity that it's consuming? Don't you see that as a huge risk? What are your thoughts on that?
So I don't see it as a risk, and it just in a literal sense that it's kind of impossible to regulate. So mining will go wherever electricity is cheapest. So it's like if you're an environmentally focused country and you want to ban mining, go for it. It has no impact at all. It just doesn't matter. Worst, if a country like China bans mining, it might disrupt things for a month while mining gets set up elsewhere. But you're not looking at any kind of meaningful effect. There will be somewhere in the world with cheap electricity that allows mining, because that's how economic incentives work. You ban something someplace, there's some government that wants those tax revenues, right? Like there's going to be some government around the world that says we would love, this massive industry to come to us. The same way that states say, zero corporate taxes for Amazon or zero corporate taxes for Microsoft, please locate a headquarters here. Is it a risk to like humanity in terms of electricity usage? I don't think so. A good line that I heard is that this is the first time ever that you've really created a global marketplace for electricity prices. So I actually briefly traded electricity forwards as a trader. And I don't pretend to really, really be an expert on kind of the electricity grid, but a really interesting thing is that you really can't move electricity. Electricity can't be transported meaningful distances, so much so that the electricity market in the northeast of the U.S. is entirely separate from Texas. You can't transfer electricity from Texas to the northeast without losing almost all of it. So electricity is local. Energy is mostly local. Transferring natural gas, even from the U.S. to the U.K., is insanely expensive. Crude oil, of course, we transport a lot, but even that is expensive to move. And so what Bitcoin mining has done, wherever the electricity is produced, it's consumed globally, effectively, right? It's consumed to support this global demand, which is incredible. It's the first time in human history you've ever had a locally produced product that's consumed in a global way. What that means is, for the first time ever, we've made this incredibly aggressive marketplace incentivizing everyone around the world to find the cheapest source of electricity. So what that's likely to do. So at the moment, it's a lot of coal in China, because that's kind of the marginal cheapest cost of electricity. It's also geothermal in Iceland. It's and a few other places, but it's a lot of coal right now. That's not going to last very long. So, for example, solar panels are improving in efficiency so dramatically that probably in something like 5 years, I'm throwing out numbers. I don't pretend to be an expert on photovoltaic cells, but the projections I've seen from the experts say we're probably like 5 years away from them actually being more efficient than coal. Maybe it's 10 years, but we're not that far away. And so it's probably going to be renewable energy located in the parts of the world where it's absolutely cheapest to source. And then there's the argument that, of course, everyone makes that this does away with a huge amount of other infrastructure, banking back offices. Almost tautologically, the cost of securing the Bitcoin network will be the lowest possible cost to secure an economic network of that size.
Yeah, and this whole thing with like the economic cost of mining Bitcoin, I really think it's more of a headline thing. I think it's really not a big deal at all. I think, it's something people read on the Bloomberg homepage or they read on CNN or something, but it's really not a gigantic deal. For what you said, energy is getting more efficient. So even as that happens, it's going to improve the efficiency of the corresponding services that use that energy. I think something else entirely too is, proof of stake. I think that's far more energy efficient. The Bitcoin network, yes, it uses a lot of energy, but at the same time, it can power a lot of different things. And then something like Ethereum, again, it's way more efficient. Proof of stake, you don't have all these machines creating all this heat, sending it into the atmosphere and all that, which again, even itself, I think is overblown. So I think that's not really a gigantic risk in my opinion.
To me, one of the great unanswered questions, maybe the biggest in cryptocurrency, is whether other consensus mechanisms will work at scale. So in fact, I'll go this far. If you tell me, if you're trying to talk to a lot of the world's experts in the space and you say, what could kill Bitcoin? A lot will just say nothing. So if you want to get a real answer, you have to take it the other way. So I'll say, like, Bayes' theorem, guys, if Bitcoin died tomorrow, what caused it? Or not died, but was replaced by something eventually. And I think that there are two answers that come up, and I'm not suggesting these will kill Bitcoin, but if Bitcoin were to be replaced by something, there's only two things I can think of that would do it. And one is a radically better consensus mechanism, whether that's proof of stake, whether it's proof of space-time, like Chia, which is Bram Cohen's project, or one of the many other consensus mechanisms being worked on. My understanding, and this is someone who doesn't really know that space, that we don't know. Until it's like new code, you don't really know if it works until it's tested. Same with the consensus mechanism. You don't really know if the game theory is sound until there's $1 billion bug bounty on it. The other being governance. So an interesting thing being, and proof of stake touches on this as well, Bitcoin has governance by exit. It might be that that's the best possible form. I don't know. But it might be that there's something better. So that's kind of another interesting area of experimentation.
Back on that energy thing real quick, I think maybe that some of the journalists that maybe are naysayers of Bitcoin know that in the United States, at least, that global warming's a big thing. So I think maybe they're putting that out to maybe spread some FUD. And I might sound like a huge, weirdo saying this, but maybe that's kind of what, maybe they're just trying to spread some FUD and maybe bash Bitcoin down. It's a story. It's a narrative.
News. Their job is to make news. To have catchy headlines and have you read their articles and click their headlines. So That's what they're trying to do. Yeah, I think you got to, especially in this day and age where it's like the attention span of the average person is, 0.3 seconds. It's like goldfish territory. I think it's more important. We talk about this a lot, how things are nuanced, and you really have to do your research and do your homework. And I think this is yet another example of something like that.
Got to create controversy to sell papers.
That's right.
Yep. Exactly.
Well, Ari, thanks very much for being on. It had some great answers that I think people will, or I know people will enjoy. So we all want to thank you for your time, and thanks for getting on and being a guest.
Thanks for having me, guys, and a pleasure meeting you in person, or more in person than just a Twitter handle, I should say.
semi in person, right?
Thank you again, man. Great stuff.
Yeah, take care, everyone, and stay tuned, and remember, tip your waitress.